What happens if you type in Google the big lie about volume profile and what to use instead? The Google going to give you a very short and precise answer, and it is completely opposite what you're going to see on the YouTube. So the big lie is about volume profile is the misconception that it is a standalone predictive buy-sell system. In reality, the volume profile is a context tool used to understand the market structure, not a direct signal generator. You can read the whole article, but if you go to YouTube, what you're going to find if you type the volume profile, you will see the very familiar faces. You will see some short videos, shorts, and you see this like incredible images, incredible titles. One is better than another, and this is like exactly the entrance. This video is about the exactly entrance when you need to enter right over here. You see it on the thumbnail, right? And this is another guru teaching about the volume profile as the one of the best tools. Scroll down, you're gonna see other familiar faces. Visible range volume profile on the TradingView. TradingView is one of the less reliable tool for the volume profile. While the indicator volume profile on the TradingView is super popular, it doesn't show the accurate data because the TradingView doesn't have the data from CME, from the exchanges. It's simply a calculated approximate data on the volume profile on the TradingView. So people believe that lie as well. Then there's a bunch of other people, really nice, like this fellow, Pigtail. Probably many of you know him. He's a really nice guy. But all this guy is teaching and a bunch of others that volume profile indicator is the best holy grail, the best how to enter into the position when you are trading. So there's a bunch of other videos. You can scroll down and you can see like this fellow, he is mocking the other indicators, but he's saying, no, you need to use the volume profile instead of the heat map, instead of the other indicators. So the TradingView, again, the volume profile is super, super duper popular, while it's very inaccurate and you can't make precise scalping based on the TradingView volume profile. So this is the big lie as well. There's some other people. You can scroll down and you'll find really nice diagrams, explanations, and why is that so? Because these people who are telling you here you need to go long and here you need to go short based on the volume profile, they don't have other tools. Bingo! The volume profile was invented 10 years ago. While there's some people selling the volume profile courses like this fellow, his course is about $14,000. And he is saying he started profiting from the trading. That was only when he started using the volume profile. I understand, guys, the volume profile was invented 10 years ago. It's really reliable tool, but not for the entries. So the volume profile is actually, there's some bunch of videos by this fellow, and his system is super duper complicated. Imagine that there is like a 50 or over like 100 videos in his system to trade with the volume profile. My point over here is to confirm, yeah, you will find that Google is saying relying only on the volume profile for entries, to make entries, it is a big misconception because there's a time to use volume profile and there's a time to use the other indicators. And in this video, I'm going to demonstrate it to you when to use the volume profile and when to use other indicators instead when you're making a decision for entries, executions, putting you stop losses and profit takes. What else the new indicators invented now that can be used for a better precision entries rather than volume profile? Yes, there is a time to use the volume profile indicator. A volume profile indicator can be placed on any range, and we can see the past information, what historically happens on this particular range. So this is the upper side and this is the bottom side. Although I can see the point of control, I can see the maximum volume traded over here and traded over here and traded over here. I have no idea, just by looking at the volume profile, the explanation why the price stuck in the upper position or at the very bottom position. If I can take this volume profile out, I can see that there is a red bubbles over here. This is the absorption of the sellers on the aggressive side of the order flow. This is the absorption of the buyers on the buying side, aggressive side of the order flow. Who absorbed those buys and who absorbed those sellers? It is the participation on the level 2 passive side of the market. Because market have two sides of that, and volume profile provide us the final interaction on the volume, what happens when the price move down or price moving up. Now we can see that while the price was moving higher over here, there was sitting liquidity on the heat map. The heat map is the new indicator that can help us to see if there's some passive participants were present for a while right over there. So they not removed their orders, and it was about 34 and then 26. And then while the aggressive participants trying to buy, they hit this liquidity on the level 2. Then they being absorbed again on the level 2 because level 2 trying to sell, and they were absolutely thrilled that somebody trying to buy into the level 2. So the aggressive side of that, of the order flow was buying, and the passive side of the order flow was selling. Now the same situation happens right over here. We can see that at the very bottom, we're seeing the market delta indicator. This market delta indicator on the footprint, we can see that there is somebody trying to sell, and we can see the green rectangles as the indication of the absorption. So the sellers on the aggressive side of the market were absorbed by the level 2. How do I know it? Just because we have another interesting indicator that you probably never seen before. This is the delta level 2 indicator. This indicator here, it is the delta level 2. It is the delta for between the pulling and stacking on the level 2 activities on the DOM. So while the seller is trying to sell, the buyers on the passive side of the order flow were buying actually right over here. And when the buyers on the level 1 and level 2, so this is the delta level 1, this is market speed indicator, and this is the delta level 2. When they united in the same direction, we can observe the strong movement up. So this is a better explanation why the price is moving. When you see both sides of the order flow, you can see absorption, and you can see why price is actually was stuck at the bottom or at the upper side of this range. So the upper side absorption and the bottom side absorption. Let's move to the current situation and take a look what's going on right now on this chart, because some people trying to use the volume profile to make a decision for entries and exits and stop losses. This is a very dangerous practice. So the volume profile indicator on this part of the chart can explain where happens the most of the trades. We can see the point of control very vividly and easily. So the biggest volume was traded right over here. But is volume profile indicator helping us to make entries? Absolutely not. Why? Because this price hit the plateau over here, and we have no idea just by looking at the volume profile why the price is hitting this price plateau. Now, when the price hit this plateau, they try to jump this resistance several times, and when we know that the candle is getting shorter and even shorter, and then The deltas on both sides of the market, delta level 2 and delta level 1, so the participants on both sides of the market, an aggressive and a passive side of that, united together, then we're seeing the strong momentum movement to upper side. And where the price was able to stop, this is the liquidity. So the price hit this liquidity that was present there, and we can see it with a heat map indicator for a while. So the price was there for a long time, sitting from over here. It was 25, then that was about 29, and it was again 29, even 30 loads. So the price went higher, passing this area easily because there were no liquidity sitting there, and the price hit this liquidity level. Just by looking at this situation and understanding the combination of the indicators or context when the level 1 and level 2 united together in their efforts, the price from the long distance, we can predict the price can bounce from the strong level. And you can download my PDF manual that explains the sniper MBO strategy. So you can easily take 8 to 10 ticks right over here by seeing this heat map liquidity. Now we can place our volume profile indicator where we can see a bigger absorption by these red bubbles right over here at the very bottom of the structure. And we can understand that if there was a strong resistance over here, by stretching our volume profile, we can expect if the price will come into this area, there will be a price reaction. But does this volume profile indicator show us there is some sellers or buyers present in this area of the price? This is only visible by looking at the market by order DOM. So this DOM, market by order DOM, show us activities on the level 2. If there is somebody is really present on the level 2 and would like to provide a support for the price, or there is a vacuum of the level 2 orders in this price level. Now let's make it a little bit smaller, and we can see that there's not too much yet on a level 2. While these people grow their size of their order, it is 17, which is not really large. So the total loads 17, total numbers of the order 13. It may provide some price reaction, but not really a good resistance for the price. Probably, if the price will go into this area, we can see that there will be some stronger resistance. Again, this is only a potential because this indicator volume profile doesn't show the heat map in this area. It only shows a zone of the interest where potentially we may expect some price reaction, but there's a vacuum. There's no level 2 orders like this one's on the heat map, like this one's on the heat map, like this one's on the heat map, sitting right over here for a long period of time. That means that is the weak spot, and the volume profile is not capable to provide the future price reaction expectations or expectations of the price in the future. We need to look more at the other indicators and the other context, what's actually happening on the footprint itself. So we can see that there's some zone of the buyer's imbalance zone happens right over here. The buyers become more active in this area. If the price will go higher than the seller's imbalance zone, then we know the price have a bigger chance to move into a higher position and hit this liquidity, because there is somebody is right now, we can see on the market by order DOM is present right over here. There's a 20 lots sitting right here, and there is an iceberg at the very top. There is a container for the iceberg ready to absorb the price from the aggressive side by the passive side of the market. So this indicator is the passive side of the market. And this indicator, like a footprint and the bubbles, it is the aggressive side of the market. we need to see the complete order flow interaction between level 1 and level 2 in order to make a conclusion for the entries. And because of that, the great indicators like delta 2, delta 1, market speed, the absorption indicators on a footprint, the imbalance zone on a footprint, the heat map, liquidity, and the market by order DOM that show us up to the second situation. There is a sellers and buyers on a level 2 that provide us a support or resistance from the level 2, which is not visible to the people who trade only a price action or a volume profile indicators. So there's a new indicators on this very chart. We can see the level 1 indicators on the footprint, imbalance zones, we can see absorptions, we can see the market delta absorptions, we can see the level 2 indicators with a heat map that show us historical liquidity, or we can see current liquidity on the level 2 with a market by order DOM. We also can see some hidden activities by the Iceberg, so we can make a better decision for our better entrances with this new set of the indicators. And if you would like to see more details and practical examples, watch further this video. But there's a time to use range profile and the time to use the heat map and time to use the MBO. So this volume profile give me idea of the major zone or areas, especially if I'm a day trader. It gives you ideas for the scalper as well, but it gives you idea about the zone where you need to focus your attention to. So like over here, POC, you need to keep attention on that area. And actually what's interesting is that this new candle spring up, shoot up from the POC. Okay, you see the importance of the POC like in orange or yellow over here, right? That is the volume profile role. But based on volume profile, you can't execute your entrance as a scalper. So it gives you area, okay, be careful with this particular section because there's a bunch of volume right below these two zones. Okay, I see that. So there's a large volume right over here. If I put my stop loss, I put it behind. If I put my stop loss, I put it behind the POC or behind this section of the bell curve right over here. And I know that this is the minimum over here on the left side. It's a minimum, and it actually shows me over here with the candle. I can see the zones out there that it was minimum. This is quite interesting zone for me to keep my attention to. So on the volume profile, the attention area is the lowest, and the thickest or largest area, okay, here, and the POC over here, or I know now my zones of interest. And when the price is gonna approach these particular spots, then I'm like, be careful. Place it right over here because this is what I called abnormally large, this one. So it's kind of close to POC, but there's a gaps in between. Okay, those gaps are quite like even this one area. This is to draw my zones of interest. By the way, this is large one. Oh, this is large cluster sitting right there. Yeah, this range profile is quite a universal, really easy to use because I can move this volume profile into another section and say, okay, I'm interested. If the price is going somewhere in this vicinity, I can see the volume in a particular section. If I'm more curious to analyze this particular, actually happens just on this fall, boom, I know that the biggest fight was right over here. These bell curves give me information only about the zones of interest on this chart. But in order for me to trade, what do I need else? I need data level 2 and data level 3. What are the main fallacy of the ICT followers that they believe that liquidity is sitting right here, while we know that this is where liquidity is sitting. Liquidity doesn't show, people believe, and this is such a widespread hocus pocus, people believe in Santa Claus, and that's exactly, the ICT is a Santa Claus. People believe that the liquidity is sitting on top of here because there is a stops sitting right there. This is a complete bullshit. The only liquidity you can watch is by turning on the heat map. Let me turn on the heat map. This color scheme of the heat map. Now it's really easy with these two red and green color scheme. This is a heat map that actually show me are there some liquidity sitting there or not. For example, I can take a look and simply extend this large cluster on the left side, which shown me by the volume profile, and I can see, there's a people sitting here. No, these 10, 10, 10, it's a bots. You see these 10s? If I switch it on the GC, you will see that there's an empty, because the bots are sitting on micro gold, and sometimes they can be completely removed in a blink of a second, all of them. So those are bots. There's no serious liquidity sitting right here on the MBO. That's why MBO is, you can't replace it with anything. There's liquidity? No. There's liquidity higher? No. There's a market maker sitting right here. You see 250? That's a freaking market maker which always move their order on top of other orders or left of the other orders, and it's just protecting the price not skewing in a storm up or down. That's what it is for. This 100 and this 250. That's a market maker. You see, they're switching their position on the left of the other orders. So this is not real liquidity. This is not real liquidity. You can't see that on the level 2 DOM. On this heat map, I filter them out. I filter out the liquidity of the market maker because it's not actual liquidity. It's not reside there long time. So this is the only software that let me filter out market maker and bots. There's no any other on the planet Earth, whatever you can say it, bookmap, schmap, whatever the software, they not able to do that. This is the only. That's why I'm proud about this. But now, the thing is that I can see the reality. There's a liquidity sitting here? No. You actually see it's a darker area over here, so there's no liquidity sitting right here. So where I'm going to put my exit or stop, my stop, if I want a confident exit, I will put my exit right before. If I'm trading the momentum scalping, which is a breakthrough, I know that there is a vacuum of orders right there, and the price, if I am placing my order right here above this top, and I'm saying I'm gonna start my buying position after the price gonna pass this cluster right here, then I'm gonna shoot up on the impulse. This is the vacuum. I see it on a level 2. I see it on the past orders. I see it on, there's no liquidity. This market maker was sitting right here for what? 1, 2, 3 candles, and then boom, he is gone. You see 18 now on that very price level. So now I know where is the vacuum of the orders. So if price will go higher than this volume, this freaking cluster sitting right there, if price is gonna shoot higher, then the price easy can go what? 1, 2, 3, 4, 5, 6, 7, 8, 10, 15 ticks. So I can do my very confident 15 ticks buying because there's a vacuum. You see, it's a block, block, block. Okay, there's a sum, 27, not too much. Block. So there's a vacuum of the orders on liquidity. This is the only what shows you liquidity, not the freaking price action. People who believe because this is the top, the price, the liquidity sitting on every single freaking top. ICT is psychologically delusional by personality, but excellent marketer. He is the marketer as I never seen. That's what he does really well. But when you listening his voice, I think that mentally he is not, let's say in quotes, normal people. And he losing on every competition, by the way. He afraid to being on a competition with others because he can't compete. So I see that there's like a Ford and some other small orders sitting there. This is significant. This cluster is still significant. That was shown on the volume profile. But the key is what I'm talking to you here. The subject is there is a time to use the market profile as marking the general area or zones of interest. And when price will approach those zones of interest, you need to make decisions. But when And how do you make a decision to enter? That information is shown to us on the footprint. On the footprint. And on the market bubbles, like those bubbles, like 28, whatever, there's not a large bubbles right now, but 44 sitting over here, that was absorption, really good. That was absorption as well. And you can see that on a footprint, it was absorption. That was absorption. But this is unfinished business, 12, 13, and this is unfinished business sitting right at the top. So the price is, I don't know when, I don't know how, but price probably, most likely, will return to this area. And now I'm simply can sit in peace of mind and wait until the price is gonna make some reversal. Yeah, there's a chance that price is gonna go to this area, okay, this vicinity, yes, exactly. But I can sit in peace and wait for the reversal. If the price is gonna reverse, it's gonna go back to this area, and probably over here, if I wanna do momentum trading, I'm gonna execute with the strategy that is called momentum trading right over here. But otherwise, my favorite is reversals over here. So I'm going to wait for the signs of reversal. And my decisions will be based on the footprint and on the absorption right over here, on the size of the candles and on the fight between the bid and ask. So I'm going to monitor the bid and ask on the footprint. And I will see that, okay, minus 65 delta over here, minus 42. Totally, it's like, wow, that's a large delta in this bar. And this bar is red. It's, it makes sense. It's moving down. Now you see that there is the large bubbles at the end of the candles. What is the bubbles at the end of the candle is telling me? Absorption, resistance from the level 2. Look at, that's what it is about. So this, you see this green, 42 was sitting there for a while, 31, 42. That was liquidity on level 2 absorbed with this bubble, red bubble. That was another liquidity, 41, absorbed right over here. Boom, guys. Now, do I see that? 52, that's why this on level 2, and that's why 20 on level 1 over here. Boom, I see that price is now getting slower, and now there's more chances to being reversed. Is that right? I already see the signs of reversal just by looking at the micro data, microstructural data on the footprint, on the bubbles, on the delta. And I see the activity of the level 2 on these particular bars right over here, because this is a pulling and stacking delta being bagaboom. Okay, I actually can tune these bars even for better precision, and I can do, instead of 14 bars on the pulling and stacking, I can do only 7, because there's a bunch of, I see there is a bunch of the boats right now. Those are boats and these are boats. I can do only 5 levels. Here we go. Now it's going to be a better precision for me what's happening nearby the price. And now this, you see this bars on top of the third indicator, delta between pulling and stacking. I call it delta 2. You can call it delta 2 as well. So now I see the delta 2 on level 2, people supporting the decision to go higher. Bing bagaboom, bing bagaboom. I mean, I love it, absolutely. So there's a yeah. Here we go. I mean, this is you see this imbalances, 25, 4, 5. You see that even imbalance zones shown out here. It shows the price, that price decided to go higher, and the same happening over here. Even we went down right now, but there's imbalances on the footprint that you can clearly see with a kind of like a bluish color and larger font on the buying side. Boom, I know that they already decided to go higher. Yeah, I can wait until maybe they stop fighting over here, and when there will be a 0 red delta, then the green guys will take over and move the price higher. Boom, baga boom. So now this is the point that we sometimes need to use the volume profile, but the volume profile doesn't give me decision for entrances. It's only give me a zone of the interest, because sometimes price need the one take, then another take, and then the third take. But I see the red bubbles again. What it is, this is what level 2 give them the big hard time. Although I see that on a level 2 right now there is a sellers prevailing on both deltas. So, wow, this is actually scary. When both deltas are in the same direction, this is like, be super careful. Wait until that situation normalized. Okay, now what I see on this candle, it's red, red, and what over here, now I see that there was some absorption right at the bottom, but there is some fight is still going on, so be careful to add another contract or entrance over here. I'll be very careful because this red on the market pushing down, on the level 2 pushing down, I mean level 2 over here, excuse me, pushing down. There's no significant level 2 delta, green delta over here. Now let me see if there is a what's going on the level 3. Although I see that in this situation, what's interesting is that this iceberg over here, volume 8, was conceived over here, and they move it higher. Why? I may guess, my interpretation of this, why this iceberg was moved from this price to over here, because you see this absorption, green rectangles right on top on the footprint. That is the absorption indicator on the footprint. And I see, okay, now guys, look attention. Look. You see, this is a large bubble, 20 red, and there is a small bubbles. That is exhaustion. My interpretation of the market delta bubble, that is exhaustion. There is a small orders like, okay, there's a 5-4 at the end. Okay, it's not serious. 5-0. 4 to sell, 5 to sell, 6 to sell. Not that significant, although they are present over there. I don't see yet too much on a buying side, so it's a little bit too early to get into the buying position. But I already see the structure over here. That's a very small body of the candle, which is, in my book, is telling a lot. Small body of the candle saying the pressure on both sides will be released into the one direction. So right now, if I'm trading right now, I'm not gonna add my position right here. Okay, right after this movement, yes, I may, because I see that 3, 6, 4, that is the imbalances, single imbalances. They're not the zone yet. The movement of this candle and these imbalances, and then not too much resistance on the selling side. Now, my interpretation, this is the exit of the sellers, not that they were entering, the sellers were entering right over here. Over here, it was absorption of the sellers, and now boom. Okay, that was the first wave, second wave down, where the sellers breathe out. You see large bubbles at the end, at the tip of the candles over here. And you see with the bubbles, you see the POC. You see the concept of the pigtails? The pigtail right over here, what it is, it's a wrong pigtail because it's at the wrong side of this bar. So that means it's more like absorption type of things going activities over here than pushing the sellers down. So they most likely exiting here, not entering into the sales. When the fight happens at the top, that means the momentum can go on this candle down. That's why this pigtail pattern is, I call it wrong. Boom, we swing down. Now, this one is very dangerous too because it's at the very top. The POC is very top. Now, my point was, look, with these bubbles, we're seeing the end bubbles and the POC. Big bubbles and the POC white rectangle. Same over here. We're seeing big bubble at the bottom and the POC over here. So by knowing the pigtail pattern, you can make your own story that price is resisting to go down. It's very dangerous to shoot down. Although, yeah, you can take another 10, 15 ticks down, but it is the more situation to getting prepared for reversal. Now, you see, boom, now very clear. We are open to go into this area. Absolutely. Now, is this a conservative entrance? Yes. Now I can enter somewhere over here and shoot into the upper position, into the long. And I know that we're going to go and probably first we're going to get reaction somewhere over here maybe. Although now we are passing this particular bubble. Nice. This cluster is still sitting there. Be careful about that spot. And the point is, why I'm making these comments, I'm making based on what? not based on the footprint. It's impossible to make this kind of comments and the story based on the volume profile. Sorry, not on the footprint, on the volume profile. Volume profile may show me that that was a significant cluster here, but now I see that it is actually sitting there for a long time. 70, that is large. And it's this, yeah, it's actually transiting now to 43. Maybe when the price is going to approach it, it's going to melt to, I don't know. But on the MBO, I can see if the people going to completely flip out of this order. You see, 76, 43, now they're only 34 now. Boom. I know now that this is no longer for me as the resistance. I know if I'm now going into the long position, buying position, I know that this is not going to be such a big problem. If the price get reaction, it's not going to be melt my heart. Oh, my order is going to stuck. No, my order is going to go back into this vicinity, into this area. This is the zone of sellers sitting right here. Will they prove themselves or not? That's what I can see on the footprint, and now I can check it on the heat map. So you see now I'm playing with the 3 pieces of data which is compatible to each other and helping to each other. That's why if I'm a scalper, I want to see a granular information and make my educated decision based on the data that I believe, not on the price action alone, because price action doesn't show the liquidity. Like I can point over here and I can see there liquidity or not. Like over here, is there liquidity? There was a liquidity. I mean, this dude, this is a market maker. Okay, so market maker is swinging up and down. But there was a liquidity sitting here. Now I see on MBO, okay, there's a 40. Okay, there's some people. What my point is, when the indicators, these 3 indicators, level 1, level 2, and level 3, compatible with each other, then you can run them on the same chart if you wanted to. Obviously, right now, there's so much data. And the person who never look at this may just like wonder, wow, how do you even see that? But with our filtering, we can completely remove one or another piece, or even we can remove some insignificant liquidity, and it will show you only really large liquidity. That's what we can do on the fly with the heat map or this pass dome type of the heat map. But the point is, we're making decision based on the granular information on the footprint, number 1. Footprint is number 1. And definitely level 2 liquidity, because liquidity doesn't reside on the level 1. Liquidity only reside, or you can find it on a level 2 data information, period. When the prices was right over here, I told you story why I do my momentum strategy from here to there, because there is a vacuum of the liquidity sitting here, vacuum of liquidity sitting here, vacuum of liquidity sitting here. You see that? There's not too much liquidity. This granular data helping to make a scalping decision. What do you control? Long ranges, long price swings like this, or you control a short distance? What do you have more control of? Short distance or a long distance? Large range or a short in between the ranges? Friend of mine who actually are professional traders, they always saying, most of the money I made on a short distance. That is the why scalping is something that now you can have more control. You have more data on this particular section of the chart. You can enlarge it, make it like significantly large. You can see every single piece of the detail with a level 1, level 2, and level 3 data. And you can make you, aha, now I can read it like a newspaper. Here we go. And I can make my decision and entrances. And by the way, 90% of my trades on the NYSE competition were positive. I mean, in one competition, it was 100% of my trades. I don't even lose one single trade. On another, I lost one because my stop was heated. So I lost only one. That's why if you really focus to enter into the ideal situation, this data gives you chance for ideal cofactors all together to make a entrance decision or a decision for the exit. That's why it is not a day trading, what you're seeing right now. Although, if you want a day trade, yes, definitely. With such precision, you can enter on a large time frame, using the situation on a large time frame by going into the smaller. And when they are like one folded into another as a fractals, definitely. Fractals inside of the fractals. I mean, look at this candle. I mean, this is like, this guy is saying, I'm going to go higher. I'm absolutely going higher. So now this is absolute situation to go into we're going to go into this range. So right before, this is the vacuum of the liquidity sitting here. So it's a really good situation. If it's going to give me another chance to shoot up, definitely I'm going to enter into and execute into the long position. This is what the micro data is on the footprint and on a liquidity heat map and on an MBO. All cofactors may produce me the best edge. That's what people say. Do you have an edge in trading? What's the freaking edge is? This is the terminology. Do you have advantage? What is your advantage? Our advantage, we trading CME exchange that provide us solid data. It's not freaking Forex where the brokers can manipulate with the information and the data. It is solid data. How many contracts? What is the volume? Who is sitting there? Who is already flake out? What is the heat map? We're seeing these cofactors that we can say, okay, they fall into my system rules. We're going to go much higher. So we actually reversing steadily. We're reversing, and the whole trend is that we have a really good chance to go over this high. Although we can get exhaustion over here. We're going to see it on a footprint. Yes, we will see it. So there's a people right now loading this. They want to support this resistance. Now I can make a conclusion. 73 right now on this price level. Before, because price swing down, they actually move out. But now they start building on. And this is, you see, it's highlighted on the DOM because that's the way I filter it. This totals over here, it's highlighted. Why is it highlighted? Because there's a more contracts than the individual people sitting here, or contracts than just a one large contract like this guy, 300. Give me a break. This is a market maker. I know it. 250 and 300 on the micro gold is a market maker. Now that's become serious. When the price will approach that particular level, I know if they're still there or not, or they will be melted and the price will melt it through and gonna go over. That's I can see only in real time. No price action people will ever capable to give the story just by looking at this chart and telling you this piece of information at all. Because price action may have a great patterns, and you see, did you see how many patterns out there on a price action? Like thousands of them. Like, why there is so many? Because in order to trade them correctly, you need data level 2, and specifically, nothing replaces the MBO. I am addicted, guys, to the MBO DOM, which not only show me how large volume is sitting here by the gray, but I see individuals orders sitting over here, and I can make a very different conclusion. That's my point. Is there is a time to actually take your volume profile, place it over here, and now expect some of the resistance in some areas over here. Bingo. Yeah, I can use the volume profile for that. Yes, I can. But the volume profile, beauty of that, it shows the real interaction, final interaction between level 1 and level 2. But it doesn't show the future interaction. Why some nice people like Dale that promotes the volume, he doesn't use the MBO? Because he doesn't have it. because people don't have the tools like that. The MBO DOM, it's a very new tool, and there's not too many people even understand how to use that. Guys, download my Sniper MBO, which I use on gold, and I use on an Asian session in a particular time, and it works like a magic to bounce from a strong resistance. But at least I shared 10 slides what you need to be absolutely perfect in catching 8 to 10 ticks. It's like almost a guarantee to you every single time. Called the Sniper MBO. You can download it from my website, bestorderflow.com. It is the excellent. And this strategy is possible only because of the MBO DOM. Bingo. Yes, of course, Heatmap provides a really great help because it's a historical record of the MBO or Liquidity on a level 2. Yes, absolutely. But the volume profile, it can give you guesses. Maybe the price will bounce from this POC, maybe not. Maybe it will bounce from this orange POC line, or maybe not. Maybe is not what you're looking for. You now see that there's a nobody sitting right now on this level. Nobody sitting here. Nobody. Like POC is right here, right? POC, this orange line is right there. But do you see any significant order on the MBO? No. There's some pressure that they're actually pushing with these boats. Sometimes you see these orders, right? That's a pressure of the DOM. Yes, absolutely. Yeah, the price may get reaction, but already, you know what's the frustration between me and the people who use the volume profile right now, since I started talking about that? Look, here's my mouse pointer, right? Look, price went once, second time, third time, fourth time, fifth time, sixth time, seventh time, eighth time, and now it's moving. Right now, there's like a 10 time is moving through the POC. Are these POC will still hold? Does it really matter? No. The value of this, not volume, value of this POC is now equal to what? Look at the MBO DOM. Nothing. It doesn't play a role. But only by looking at this POC on the volume profile, you're like, oh, there is a chance that this POC the price gonna like react over here. It's already reacted 7 times, and now it's not gonna do it anymore. It's gonna finish fighting over here. I don't think that this POC is actually important. What's more important is immediate situation. And my point is that you see this large area of the bell curve. It is the whole big area. And you see how many times you're supposed to make your decision. 1, 2, 3, 10 times now. You can't make your decision to trigger, to execute entrances based on the volume profile. It is the only great tool for preparation, not for actual execution of trades. Now, you see, there is a place, there is a time when you can use the volume profile, which I highlighted the area of the interest as the way to get ready. And when the price is approaching over here, I'm gonna more careful with my footprint. Based on the footprint, I'm gonna know what I'm gonna do in these certain areas or zones of the interest. So that's why this is the zone of the interest. It's not the resistance zone, guys. Many people like frustrated. Why if I trade the volume profile indicator, it doesn't work all the time? Because it shows you potential. It doesn't project you future. The future and reality is only visible on the heat map and on an MBO DOM. This is it. That's my main point of this presentation. So my goal is not to put down the volume profile use, because I use it like almost every time when I trade, but there's a spot why I'm using it. I'm using it as a preparation, but for my decision for entrances, I use most of the time POC on a footprint, finish it unfinished business on the footprint. I see these zones like this one. It gives me a good piece of information, imbalance zone and individual imbalances over here. And it's like naturally understand that why you're seeing this green candle gives me a justification. We started right over here. We've got absorption. You see one bubble, another bubble, another bubble. We're at the very bottom of the candles. Interesting. This is the volume pattern. The people on the price action, they don't see these bubbles. They only see the tails over here. But hey, they have no idea why this tail is that exhaustion or that absorption. They have no clue. So that's why when you combine and the price action and the volume, they call it like a auction. My conclusion is it is outdated concept, guys, because this is the volume interaction between level 1 and level 2, and we're seeing detailed with MBO data. That's why when you're seeing on the bestorderflow.com the word in menu ledger is the record, is a financial record of the interaction between level 1 and level 2. That's a ledger is. And so that's why on my website we stop calling it bookmap, this liquidity, we call it ledger. Bookmap is outdated technology, number one. They're very sluggish. I'm hitting on them very hard, guys. I know what I'm talking about. They are outdated. They are sluggish on a high volatility. They couldn't produce that clarity as you can see with this software we called ledger. That concept of interaction between level 1 and level 2, because that is the complete order flow. This is what complete order flow right in front of you guys. It is the complete order flow. And when you have an incomplete picture, you trade only by price action, or you trade only by footprint, or you trade only by volume profile. It is incomplete. And that's why people get frustrated. Why I trade the best, I paid the best money. I know one guy who sold the volume profile course, trading course, $15,000. $15,000 he wanted from me. I don't mind, but I think like it's not about the money. It's about how much you can squeeze only out of the volume profile itself. Dude, it's a limit what you can get out of the only volume profile because it is not complete order flow. And right here, right in front of you, you're seeing the complete order flow chart, and it is on the same chart. No any other software have that type of compatibility to run it on the same chart if you wanted to. They are not compatible. They may sell you separately Heatmap, separately a footprint, separately MBO, separately MBO DOM, but it's not congruent. They can't run it on the same chart. So it's really hard to get a complete order flow chart. Now you can read the all cofactors on the same chart. So the footprint is integrated. The heat map is integrated. The MBO is integrated. All indicators, they can run on that chart. Professional built indicators can run on the same chart. Whatever VWAP, SHMIWAP, this is integrated complete order flow. You will get not only a separate footprint, you get all of that integrated on the same chart, and you can enjoy the aesthetics of that, the speed of taking decisions, the amount of cofactors you can put together into your trading system.